Hi everyone, welcome to another brand new episode of Women of Community Banking podcast. Today we have Reva with us. Hi Reva, how are you doing?
I'm doing well. Thank you for having me.
Absolutely pleasure, Reva. Firstly, thank you for taking our time out to chat with us today. We really appreciate. It's difficult to get time on a calendar for months, but after finally, she has some time to talk to us. So we really appreciate that, right? On the first place. Now, who's Reva? Reva is a well acclaimed financial services veteran, I would say, having close to 25 years of experience in financial services. There are very few, there are some unique things about her. She's one of the very rare professionals that I'm talking today who has started a career back in Australia after a B school. Started a career with one of the largest banks, City, made a move to, JP Morgan Chase, followed by Wells, spent a couple of years in fintech, and finally made a move to credit union ecosystem, the golden one, and then to Travis, right? So she's one of the very rare chief lending officers that I've seen, the lending professionals I've seen, who have had exposure towards banks, fintechs, and credit unions. So she gets the triangle ecosystem out of there, right? So Reva, I hope I was able to do maybe, an ounce justice to your introduction. I'm sure I've missed multiple things. Please feel free to add it.
Oh, great. Thank you. No, it's a great introduction. In fact, I'm going to have you part of my hype team. Everywhere I go, I'm going to have a little recording of yours. I'll carry it with me. So thank you.
Absolutely, would love to cheer you every single place where you go. Absolutely. Now, Reva, obviously, as I talked about, your journey is not a very conventional one. You started back in Australia, moved to this country years back. Uh, so, what keeps you going? There's so many moving pieces, right? That you had to assemble together, and now you're based out of Bay Area, right? So, what keeps you going every day?
Yeah, it's a great question. Thank you. I would say one of the things that obviously I'm a big believer of is a continuous learning program. So I love the idea of embracing new industry trends or technologies or best practices and inspiring as well as getting inspired by others. There's so much innovation. And I think the banking as a silo is really an old time, old concept. We're now intermingled with technology, we're intermingled with new product and innovation. And so, in a way, you think about banking, it's a continuous path with clear objectives for each group to do their business. Obviously, we're here in the business to lend. So, the idea that we can work and collaborate with different partners and come up with new products and technologies that help people get into their homes, get people into their cars, help people pay for weddings, pay for their children's education. That inspires you. I think that to me is the end goal of the journey. I often say people don't wake up in the morning and say, I want a loan. They wake up in the morning and they say, I need to drive my kids to school. I need to get to work. I need to have a home for my family. We're just a means to an end. And with the help of technology, with the help of lending, and with the help of all of the pieces that put this puzzle together, we're able to provide a tool for the members to be able to get to their homes, live in a home, and drive to their work or pay for their kids' education. So that's, I think, what inspires me.
Absolutely. So, if I want to, conclude this, right? It's more purpose and passion driven than just being tactical. And obviously, I don't think you wake up in the morning and you tell yourself that Reva, I want to become the next banker, right? Not really, right? It's about you wake up in the morning with that same zeal, with the same passion that how can I help someone get their first home? How can I help someone like me who's an immigrant, right? Their first car, their first auto, right? So I think that's the passion-driven approach that you talked about, and this is on point, right? Rick, I want to ask you about your journey, right? Now, we had one thing in common that both of us moved back from India, right? Something in common, but again, our journeys are very different. You started in Australia, I was back in Dubai, and different journeys, right? So I want to ask about your journey. So if you can just maybe talk about your journey, how has it been moving from India to Australia to this country, and I would love to know more about that.
No, that's a great question. I would say I think it's an openness to learn and to adapt. So I was open to new ways to look at things. Obviously, having went to banking school I went to business school in Australia. So obviously, the education and the environment allowed us to be open to to new ways of looking at it. Obviously, Sydney is very different than New York, is very different than San Francisco. Each city has a big culture and a big financial difference in how they approach things. Australia was at that time a lot more laid back, but New York is obviously the hub of everything that's high energy. San Francisco for Wells Fargo was also very different. I got the experience of experiencing credit cards in Sydney. We launched a photo card, and that allowed us to be much more look at new product launches and how that was done through Citi. In New York, I got to work in financial services and in home equity, which was kind of new with regulations that had just changed. But then in San Francisco, I lived through, which would be in our lifetime, the worst financial crisis. So you got to experience different things, and you saw leadership do things and approach things differently. So I think every unique city has its own energy and its people, but ultimately, I say the responsibility lies with the leadership you surround yourself with and the peers you surround yourself with, and you learn so much from each other and from one another. So it's kind of different.
Absolutely. And, to that point, obviously moving from city to chase out here in New York, I mean, Sydney to New York has been so different, right? I would say the transition from banks to fintechs to credit unions, right? This has been a completely new journey because credit unions operate so different, right? So, what motivated slash what helped you decide that you want to finally work with credit unions after working with the Wall Street banks and fintechs? So, what is the reason behind it, and how do you like it now?
Yeah, I mean, credit unions matter, right? They have an absolute purpose in what they offer to their member base. So you are looking at uh, definitely sometimes lower fees. You're looking at members helping members. You're helping at the ultimate credit union being having a voice versus a shareholder. You're actually looking at a member being a part of the credit union framework because of their ownership structure. But most importantly, I think credit unions matter because they're embedded in the communities they serve. So I've had the great privilege of working in one of the largest credit unions and Golden One, as well as a slightly smaller credit union in Travis. Very different structures, very different styles. One was California based, one was very in just 12 counties. Very differently, but the loyalty that you saw in credit unions, you cannot beat that. There were people who would stop by when I was working at Golden One who would say, my great grandfather, my grandfather, we've all just had. So there's generational of families who always work, have partnered or worked with credit unions. You don't see that kind of loyalty in
Yeah.
fintechs. Nobody says generations have now banked with, and I don't want to name the fintech, but any fintech or, even banks. Community banks had that kind of loyalty.
Yeah.
As banks became bigger and larger, I think you lose that kind of essence of what a community banking is. And I
Yeah.
think that credit unions are still preserving that while
Yeah.
while
Sure.
still giving benefits. Sorry.
No, I mean, absolutely. I mean, that's the mojo of credit unions, right? I mean, that feeling of community. I mean, I'll give an example, right? The way, I mean, I'm a member of a couple of credit unions. The way how I'm welcome to a credit union branch versus the way how I'm welcome to a big financial institution, I can't even compare. We talk about experience, right? I mean, we talk about member experience. So when I put myself in both the shoes, member experience and customer experience, it's actually customer experience and they treat us as just customers. But when I walk into a branch of a credit union, it's a different experience. I'm delighted. I mean, I was never this credit union guy even 3 years back, but now I strongly believe in the mission. So I completely echo Reva. Whatever you said, it's a different ecosystem altogether. Absolutely. Uh, Now moving back to your journey again, right now, obviously, uh, I think you've seen more world than many of the people I talk to, right? I mean, moving continents, from New York to the Bay Area, it's a completely different culture you've seen in the fintech world. Now, definitely, that hasn't come through without any challenges, right? Definitely, you faced hurdles. You're with your husband moving countries, continents, cities, and you moving with him, finding a job. These were not easy, right? Would you want to talk about because this podcast is again about celebrating challenges, failures, successes of leaders. It's not about just the shiny part. It's just unfiltered, right? That's the reason I'm asking a question. So you talk about the challenges that you faced throughout your long-standing career of 25 years, and how did you overcome them one by one?
I would not say I've overcome them. I would say I've accepted them. I would say I think the hardest part of being a woman in leadership is having a network of people that you can reach out to. I would say it's not something naturally that we would say we surround ourselves
Yeah.
with a lot of network of people.
Well,
We tend to be inward in terms of our work, our capability, what we do best. There's a big, I think, a divide on what women think that their capability is. Our work should speak for itself. You should see the results I produce. It's not through a network of people. And I think the hardest part when I moved from country to country was rebuilding that network, is allowing myself, making the effort. And that comes with a lot of time. And when you're raising a family and you have other, things that take up a lot of your time, it's kind of hard to balance the work part and the networking part. And I think I'm still learning to do that better. But I think I would say, as a woman in leadership, that is, I would say, one of the hardest things is to surround yourselves with other people who will prop you up, who would mentor you and give you the opportunity that you would not otherwise get it. Of course, you can apply for jobs. Of course, headhunters will reach out to you. But there's very rarely an opportunity where other leaders look at you and say, "You're my guy," or "You're my person," and "You're the woman I need for this role." That doesn't come with a concerted effort. I just think that some people do it better. I would say women in leadership, at least in the last 20 years, is improved greatly. I think there's a lot of groups now propping women, allowing them to become better mentors as well as mentees, and giving them opportunities. I would say that's been the hardest part.
and I'm sure by this approach of again that same principle of people helping people, it's like women helping women, right? Obviously, definitely, there's a huge mile to walk, and that's what we're trying to do at Women of Community Banking podcast, creating a safe network of women leaders who can talk to each other freely, safely, right?
So
That's a
stay there for a second, Anurag. So, like, from a perspective of how many women in leadership exist today, I would say it's less than 10%. So if you think about women helping women, of course I would like to help other women. But if your kind of your baseline is less than 10%, single digits, where is that, 90% of positions? And I'm not saying men only help men. So please, that's in fact one of my biggest mentors is a gentleman who has been a powerhouse in itself. So I would not say that. However, if that's the idea, that if there's a group that's helping a group of other people, it's harder to say that women can help other women, because then a lot of times they're not in positions of power. They're
true.
not in a place to be able, they're still trying to figure out their place in that organization. So it's harder for them to help other women of similar power.
Absolutely. I mean, that's the reason you need to have a combination of both men and women. That was another reason because of which I spinned off the other podcast for the Outlier podcast to make it more exclusive, right? Making it gender neutral. Absolutely makes sense. Now, I want to ask you one pointed question about advice. Right now, what you talked about is representation of women is in single digits. That's the reason a lot of women don't prefer speaking up, coming and talking about what they think, right? And hence a lack of guidance or motivation comes into play, and that's normal, right? That's like everywhere. So do you have any advice for aspiring women leaders, right? If you want to share some pieces of advice, some nuggets, it'll be great.
Yeah. I would say, and I've said this in a couple of other articles that asked me a similar question, is one, I would say, is be open and adaptable. Keep up with the trends, understand what the market is changing to. So navigate any complex situation with the best way you can, which is understanding what the new trends are, and to keep up with what the changes are, be adaptable, be nimble. The second would be network. Really, I cannot stress this enough. If you want to be just one of the many resumes, that's what you will end up being, is one of the many resumes. But if you really truly want to stand out, find opportunities to network. And the third would be, I would say, be clear on what you want to do. Clarity will help direct people's attention. If you only have 15 minutes with a leader, a potential leader who's going to help you, have a kind of a 30-second pitch of who you are and how you want to present yourself and where you want to go in the next 3 to 5 years. I think that'll help position you in a way for the future, as well as allow you to present yourself with clarity and transparency.
Yeah, I think that's a very very advice, Reva. I mean, we should introspect on what you talked about. I think everyone should think about this. It's a very valid thing, right? Okay, so moving on to work, right? Lending has been your passion, right? Forever, from launching credit cards back in Australia to coming to US with JP to Wells. Uh, so I kind of define lending as lending 2.0 now, because lending has evolved, matured a lot. There was a time when underwriters used to underwrite loans with pen and paper, right? But now, cut to chase, I mean, with like just an example with DeepSeek coming on 2 days back, right? I mean, no one knew that again ChatGPT or OpenAI will be challenged, right? There's been a revolution of using data analytics, and for the lack of better words, AI is a kind of flop word, but still I hate word they use AI because I'm a data scientist. So let's take into consideration data science and data, right? So lending has evolved a lot because of availability of external data, using AI for underwriting. So how do you define lending 2.2, and where do you think is the lending ecosystem moving forward to?
Yeah, no, it's a great question, because I think it's very relevant given all of the machine learning tools that are making their way into various lending programs. I would say making lending simple and easy and personalized is the way lending will go. If you just give what you if I'm a defined by a simple credit score, then you're kind of just getting me a part of me. But if you look at my overall structure and say, what do I need to be, and how am I going to repay that loan? That's one part. The actual, what I would call the 5 C's of credit, right? Capacity, credit, character, collateral, and the employment. So all of those pieces would definitely make for a better credit structure. However, the big part of lending that is in the future is going to be fraud. How are we going to handle fraud? There is going to be the personality traits, but then there's also going to be the how do you mitigate fraud? How do you make sure the people you're giving loans to are the people who you're giving loans to? I think that's going to be the big difference, is because we'll make it simple, we'll make it easy, we'll make it personalized, but we also need to make sure it is the person we're giving the loans to. So I think there's going to be kind of two aspects of lending. We need to make lending so simple that limited amount of documentation needs to be collected from the member, because everything else is available. I often say we call them members, but we treat them like strangers. They keep coming back to the PFEs, the primary financial institutions, for their lending needs. But what we end up doing is asking them a bunch of questions that we already should know. We ask them for a lot of the documents that we should already know. And then yet they keep coming back. So we don't reward loyalty in the way we should. So therefore, we need to make that very streamlined and simplified. But then on the other side, we need to make sure that we are taking all the characteristics of risk to make sure that the people are who they are, the collateral is what it is, and the capacity is what it is. So those two aspects need to be modified. And I think that is going to be the way for the future.
Absolutely, I think this is a challenge everyone is talking about. Is, I mean, I always talk about one common trait: the amount of investment that will happen in AI in the next 10 years. I strongly believe the amount of investment that will go into compliance of AI, regulating AI, that will be much more. Now, why do I come across regulation and compliance? Is creating a fabricated document today is like 100x easier than it was 10 years back because of deepfakes, right? How do you identify them? How do you identify that these documents are not forged or fake, right? And plus, how do you identify that this is not someone representing someone else? So yeah, absolutely. I mean, fraud is a huge component in the entire ecosystem, and again to your point with making lending easier, sexier, and much more accessible. One good thing is that yes, people like me who are underserved in my 2 cents, right? I was a thin file. I will get much easier access to credit, but again, not to ease in the guardrail that you can lend out to anyone and not checking the fraud guardrail. This is a very valuable point, Reva. I think it's a topic of discussion even after the podcast. It's a very broad topic, right? In the interest of time, I know we're all almost on top of the hour. I'll ask you one last question about which I almost ask everyone is uh, on the I mean, you being a CLO, right? I would want to talk about macro eco conditions. Now, obviously, rates are coming down, lending is opening up, definitely, that's sure, right? But how do you think is the lending ecosystem, right, being impacted by the macro eco parameters? That's one. And second, how does 2025 look like for credit union? So it's two questions coupled in one. You can just answer one by one if you want.
Yeah. I think there's obviously a lot happening. Obviously, as we've talked about, the machine learning and the AI avenues is making revolutionizing how lending will be done. So the act of doing loans is going to become easier by definition. But we're also looking at a change in how we're decentralizing a lot of the lending, right? We're partnering versus where a lot of banks and credit unions used to create programs on their own. We're seeing a lot of partnerships emerging. If you can do better, if company A can do something better than me spending hours building it, then I'm going to go and partner with them because that's going to make my access easier. The improved experience of how that is going to come from loyalty. I think there's going to be a big factor in change in the next few years is who will come back to you for business. And that's going to be defined by when the rates come down. If I can go back, and I'm going to use Rocket Mortgage as an example, when rates were really low, I never met my mortgage partner. All I needed to do was reach out to him and say, "Hey, rates came down. What can I do?" And he would just say, "I have everything you need. Just send me the documents." And within 7 days, I used to do a refi. So the idea isn't the actual act of doing the refi. The act is how can you make it faster and easier and simpler to get me to that end institution. So I think in the next few years, with rates coming down, a lot of portfolios are sitting on the higher rate. And so if you want to keep that rate, you need to reward loyalty for your existing members and attract new members with a faster, easier, streamlined program. And I think the companies that do those well will obviously succeed much better than other institutions. You need to keep growing and diversifying your product. That goes without saying, but I think ultimately it'll be streamlining and efficiency that'll win the day.
That makes sense. And to my second question, right, about how do you think 2025 looks like for the credit union ecosystem and where we are moving to?
Yeah, I think the credit union ecosystem is similar to the larger financial institution. We're very rate dependent right now. A lot of portfolios are hurting. We have the higher margins, but you do not have the growth. I think to make products affordable, we will need to see either diversified set of products or products that allow the low and underserved communities to have access to loans. I think there is a shrinkage when with such high rates that we could get there. So I think 2025, unfortunately, may look a lot like 2024, but I do think in 2026, with the softening of the rates, we'll see higher production goals.
So, Reva, this was a really power-packed show that I did maybe in just 25 minutes, under 25 minutes, but this is like great, Reva. Thank you again for your time today that you spent with us. We really appreciate this.
I appreciate it. Thank you so much for having me.
Thank you. Yep.